now is the time to buy Greek bonds. That's a message from Kraus, a strategist at Otkritie Financial Co, a brokerage part-owned by Russia's second biggest bank. He joins us now live from Moscow. So what makes you so confident about Greek bonds?
Well, yesterday I put out, at Otkritie, we put out a call that the bonds were becoming very, very cheap. We were picking up 2013s at between 58 and 62 cents. It was a risk manager-driven trade. All the banks were dumping paper, and we saw a tactical opportunity. On the longer term, I do think that there's not going to be a default in Greece, simply because the damage, the peripheral damage would be so great that I think this is going to focus the minds of the people in Bonn and in Brussels.
Again, I have to ask you, what makes you so confident that Greece won't default? Because, as we've been hearing, there are concerns that this amount of aid, 45 billion euros, isn't going to be enough, that the package will need to widen to include other countries. So perhaps even if this aid package does go through, as you're saying, it won't create the bounce in the market that you're looking for.
The aid package will be a first vital step. The problem is there's a fire in the basement, and you've got the politicians talking about what the architect should have done when they were building the house. This is really interesting information, and someday the historians will have a lot of fun with it. Right now, the problem is you've got to put out the fire before there is further damage. And if you've got Mrs. Merkel's statements over the evening, they've suddenly become cognizant of the fact that if they do not act to put an end to this, at least temporarily, they're not going to have to worry about the long term. There isn't going to be a long term.
So, I mean, do you think that the 120 billion euros the EU and the IMF are now talking about is enough to spark a rally in Greek government debt?
I think at a certain point they've got it. It's going to stabilize the debt. There is a long-term problem. We are going to see a differentiation of sovereign lending rates now. The notion that you could lend to all of the European Union at one basic interest rate is historic. More broadly, we are seeing the beginning of a global sovereign debt crisis. Ironically, it's starting in Europe, which is in much less bad shape than are Japan, the UK, or the United States, which have much larger structural deficits. Now, they can fund their deficits more easily because they issue their own currencies, but this is like the difference between solvency and liquidity in a banking crisis. Yes, they have liquidity, but the ultimate solvency of the other countries is not clear. So maybe Greece will go down. I'm not sure that it'll be the first to go.
So, I mean, if we look at the situation facing Greece right now, it is turning into a race against time. They have something like 10 billion euros worth of bond payments due in a couple of weeks' time. We've got Chancellor Angela Merkel stalling on any kind of emergency aid package. You yourself have said that the 45 billion euros would be a first step. It wouldn't necessarily be enough. Could a default soon follow? Is that something that you're concerned about?
I'm basically concerned in the short term that the contagion effect be stopped, that Europe make a strong enough move to make markets feel that, yes, there is a pilot in the cockpit someplace. I mean, obviously, there is a lot of reform is going to have to be carried out. We're going to see a recession in the high deficit countries. Whether this is politically sustainable, nobody really knows. We are all trading very short term right now.
Yeah.
We're all sitting on one long trading desk.
So let me ask you, Eric, because what about, we've seen the euro lose a lot of ground and it hit a new low off the back of the latest downgrade. For non-euro investors, is there a risk that what they make on the bonds they could lose on the currency as the euro slumps? Could you answer that very briefly?
We have been closing euro shorts. At these levels, the euro does not seem to want to get pushed down below 132. There appears to be some basic backup there. I would be basically flat and worried about the euro right now. I would close shorts.
Well, Kraus, thank you so much. We do appreciate your time.